Welcome back to Trading Hour. Let's get you some buzzing stocks now. Hero MotoCorp tops our list. It's the top loser on the index today after reporting a disappointing operational performance in the quarter gone by. In fact, the revenue growth was not too bad. It was a 7% growth on the top line, but it's the margins that have resulted in a deep cut on the stock. The margins are down over 100 basis points year on year, and the company has had higher ad spends which have hit their margins, raw material costs as well. Despite a fall in raw material costs in the quarter gone by, they haven't been able to see the benefits of that this time around, and margins have slipped to 11.4%. That has dragged their profitability lower as well. The management commentary was also a bit cautious. They do believe that the global headwinds are something that could continue to keep a lid on the gains for the company, and volumes continue to be under pressure purely because there's been no real recovery in the rural markets, because of which volumes were down almost about 0.7%. So it's a tale of two cities in the two-wheeler space. On one hand, you have Hero MotoCorp under pressure. On the other hand, on the flip side, Bajaj Auto is doing quite well on the back of multiple upgrades that have come in on the stock.
And you've got a busy day as well, right? TVS and Escorts both report their numbers later today. But let's put the spotlight on Ajanta Pharma. That's deeply under pressure. Ekta's here with the details.
Well, yes, definitely a multi-quarter low when it's come to the margins of Ajanta Pharma. It's coming at around 20.9%. The street was anticipating at least around 25%, and this is versus 29.7% on a year-on-year basis. Now, that impacted the profitability of the company, which was down 20% on a year-on-year basis. Now, in terms of the revenue, that was in line with estimates, so it was up around 6-odd%. The street was anticipating around a 7% growth in terms of the revenue. Now, India's sales was higher, so that was strong, up over 25%. We had Asia, which was up over 30-odd%. What led the revenue lower was the US market, which was down 5% year-on-year, and the Africa institutional business, which was down 50% on a year-on-year basis. Now, a couple of key important takeaways. The margins this quarter were impacted by factors such as a higher raw material as well as freight costs, price erosion in US generics, and preponement of certain costs. However, what could probably cushion some amount of the downside for Ajanta is that they are more confident on the second half. So they've guided for around 26% EBITDA margins in the second half. They expect Asia to grow 20%. They expect India to grow in mid-teens as well. Motilal has a buy with a target price of 1560. Incred maintains an ad with a target price of 1439. Both, however, have cut their earnings estimates.
All right, Ekta, thanks a lot for taking us through all of the details on Ajanta. But Amara Raja as well as Exide are in focus. Amara Raja is seeing a huge gain right now. So Sonia is here to take us through what's happening here and why the battery stocks gaining.
So both battery stocks, right, Amara Raja and Exide are doing well. Now for Amara Raja, the margin improvement is really the big story. After 5 quarters, Amara Raja has returned to 13% plus margins, and that's a 140 basis points improvement compared to same time last year. So if you look at the trend, for a very long time, the margins were languishing between 10 and 11%, and now finally back above 13%. The big trigger really is the fall in lead prices for battery companies. Lead prices are down 10% on a quarter-on-quarter basis, and about 70% of their raw material costs comes from lead prices itself. So that's a big tailwind. But I was also looking at the valuations on why Exide is surging as well. Now, if you look at the valuations, there is some headroom that exists for both Amara and Exide. Both the stocks are trading at 13-14 times FY24 price to earnings. Amara is about 13.5 times and Exide is 13.8 times. Now, both are trading at the bottom end of their historical trading range. The trading range historically has been about 12 to 18 times, and now they're at the bottom end, so there is more valuation headroom, and hence the stocks are rallying. The commentary from the management was also quite positive. They say that the demand in the automotive sector is quite robust, both in aftermarket as well as the OEM segments. Exports have shown a healthy growth, especially in markets like Middle East and Southeast Asia, and the industry battery volumes have picked up because of the telecom segment driven by the 5G rollout in India. Also, the company has announced a lithium-ion battery manufacturing subsidiary, so they're getting into this space in a big way, and that is another positive trigger. Hence, the stocks are up and about.
All right, so both of those stocks charging up. Amara is up over 10%. Exide also seeing a gain of around 6% as we speak. But with that, it's time for a short break on the show. When we come back, we'll get talking about some earnings. Amit Agarwal, Group CFO of Raymond, will join us to discuss their quarterly numbers.